Welcome to tonight's sessions. We have Singapore Tuesday, and today we're gonna basically talk about the semiconductor sector in Singapore. And basically, Alvin has done some research on the semiconductor industry as a whole, and then we'll take a look at what Singapore has to offer. All right. So before we start, as usual, whatever that is being discussed here today and mentioned here today and shared here today is for educational purposes only. It's not intended as any investment advice whatsoever. So if you want to look for investment advice, please do look for a professional and licensed investment advisor. All right. So welcome. Thanks. If you can hear us and see us clearly, please just say yes in the comment section so that we can begin. Yeah. Good evening, Colin. Hi, Jatinda. Tan Bok Su. Welcome, Wang CY. Chia Chuan Chun, welcome. And good evening, everybody. And for those who just joined us, today is Singapore Tuesday. We're going to talk about the Singapore semiconductor sector. All right, and we do have some examples, some case studies that we want to share with you as well, so that you are able to make a well-informed investment decision if you want to look at the Singapore markets. All right. Thank you, Tan Bok Su. Thank you, Huang. Okay, awesome. Now we can start. Looks like they can hear us clearly. Okay, I'm going to pass the session to Alvin because he'll do the presentation, which he has done. So, Alvin, it's over to you.
Yep. Thanks, Benny. Can you hear me, though, Benny? Can you guys hear me? Can you hear me? Hang on. Let me just test. Can you hear me? Okay. Faiz can hear me. I hope the rest can hear me. Benny, you can hear me, right? Okay. Benny can't hear me. All right. Might need to log on and log off. Okay. I hope the rest of you guys can hear me. Those in the audience. Okay, loud and clear, Alvin. Okay, thank you. I think then Benny's speakers may not be working. All right. Until we get it sorted, let me sort of get started here. Now, as you all know, every Tuesday is Value Investing Tuesday now. And Thursday tomorrow, we're going to have our value investing Mandarin session tomorrow. And of course, on Thursday, we have crypto or anything related to tech. It's going to be on Thursday night, right? So today is this is my second presentation, but our third installment into the SGX market. So, if you have already bought SGX stocks, maybe just curious, those who have watched my last episode, if you already invested in SGX stocks, if you can just put yes or invested in the comment section below. I'm just curious to find out how many of you guys have done that. Of course, today is a Tuesday. Tomorrow is another public holiday. So happy Malaysia Day to all of you guys. In Malaysia, we're quite special. We have two Malaysia days, right? One on August 31st and one on September the 16th. Now, so if you guys have already invested, just put in the comment section below. Let me just kind of share my screen now. Now, today's segment is really, the whole reason why we wanted to look at the semiconductor industry is because I think Malaysian investors are quite crazy about the semiconductor industry. And what I was quite curious to find out was what does the Singapore market look like? Because I think in a globalized economy like where we are today, I think generally we used to be quite home centric or home bias, which means that we only invest in at home, right? Actually, you kind of have to look outside and kind of build a portfolio, regardless of the exchange. I guess the question here is, what are some of the stocks out there that are available to us in our portfolio? And that's really the objective of today, right? So, of course, today's market is the SGX market, right? Of course, very quick disclaimer. I'm going to be talking about 2 stocks tonight. So, any of these stocks that are mentioned, purely this is educational only and not meant for investment advice. All right. Okay. Now, also take note. I'm not an electronics engineer. Actually, I'm trained as an accountant and in IT, right? So, if I make any mistakes, please point them out because I don't want to get too technical, in case I get it wrong. But really, the whole idea here is just to make sure that the concepts that go through, that you guys can understand what you guys are investing in. All right. Now, of course, as part of this campaign of these episodes that we're running, covering the SGX market, we've actually created a Facebook group where you can actually join, and that's where we're gonna put in some other videos that's related to the SGX market. And all these videos that we're producing right now, you can actually get it onto the ET Online campus as well. So we've actually created an ET Online campus. So at the end of this show, if you want to find out a little bit more about the Singapore stocks, I can check out facebook.com/groups ET Online Campus SGX, right? So everything to do. So you want to discuss about SGX stocks, it'll all be inside here. All right. So one of the kind of jokes that have been circulating around during COVID-19, right, was who led the digital transformation of your company, right? Is he a CEO, CTO, COO, or whatever the C-suite, right? Of course, the running joke is that COVID-19, right? So I guess if we look at the negative side of what COVID-19 has done, I mean, if you look at it in terms of positively, COVID has brought about immense, right, innovation, and as human beings, innovation is until you need it, then you innovate, right? So I think during COVID-19, where we all stuck at home, we have to stay at home, a lot of companies had to pivot, right? A lot of companies that couldn't have shut down, and a lot of companies that are trying to survive have to pivot, right? So when I was kind of looking at this, at the end of the day, the question was, what is it that drives the semiconductor industry? Now, so if I look at some of the semiconductor stocks in Bursa Malaysia, if you look at them, almost all of them are actually at their all-time high, right? So I have on the top left is Vitrox, then on the top right is Geotronic, FP Group on the left, bottom right is actually GF Tech, right? So you're seeing, well, we're seeing a lot of interest and a lot of these a lot of these sort of retail how do I say interest in semiconductor stocks in Malaysia. My question is, why don't we look outside and see what are they looking like, right? Of course, these are the ones. Elsoft is not at all-time high. Then you have KSM, also not at all-time high, but here I have is Me Innovation and Unisem as well. A lot of these guys are trading all-time high, right? So what you saw from my last segment is that you're seeing that even though companies may not be listed in Malaysia, but a large bulk, or typically some of them actually have bulk of their operations actually based in Malaysia, just that they're listed on the SGX, right? So our friendly neighbor down south. Now, so the question is why should we even look at semiconductors, right? Why? I mean, what's the big deal, right? There must be a reason why, right? And in the midst of actually doing this research and really finding that why, and it's kind of forced me to really think why, right? Why do we buy tester companies? Why do we buy OSAT companies? Why do you buy component suppliers to some of these semiconductor giants, right? There must be a why. Now, if you look at it historically, if you look at the blue line here, let me sort of bring in my pen here. Okay, kind of bringing my pen here. You can sort of see the blue line is in terms of billions, right, of revenue for semiconductors. You kind of see from 1996 all to where we are today. We hit a peak in 1.8, right? It's come down at 1.9. But the general trend is actually upwards, right? In 2008, you see a big drop again, and then you kind of see an upward trend all the way, right? So there must be a why, right? And if you look at the long-term view, the question is: are semiconductors very much part of the global growth story? Not just a Malaysian-centric or Singapore-centric or any country-centric. Is it part of a global growth story, right? And of course, if you're investing over the long term, the question is, shouldn't you put your money where, I always say, follow the money trail, right? So in a way, I'm just giving you a big snapshot. This is sort of the money trail, right? So why is there a lot of money going into this space, right? I think, like it or not, you're gonna realize that in all facets of our lives today, even if we drive a car, you have your mobile phone. I'm streaming to you live on my laptop. You're watching this from your mobile phone or your iPad or your desktop. Semiconductors have been quite pervasive in our daily life, right? And it kind of got me thinking, right? Why is it that there's been such exponential growth in this space, right? Um, and I see Daniel here. I will talk a little bit about the U.S.-China trade war as well. But at the end, like, what's the fundamental point that is ultimately driving this, right? Driving this, right? And I, when I was doing my research, I kind of stumbled upon this, and I thought it was a very simple one. How many of you guys remember or read about this thing called Moore's law? Anyone? Put in a comment below. They read about Moore's law. I don't know. Benny, have you heard of Moore's law?
Nope, first time hearing it. Maybe I'm not a tech guy lah.
Okay, so I remember hearing about this when I did I think it was in high school when we did IT back then. Definitely more than 20, 30 years ago, right? In high school, I remember, they say Moore's law, right? So I'll talk a little bit about who Mr. Moore is. Yeah, some of you guys, yes, remember, right? So at the fundamental point of Moore's law is very simple. He's saying that that basically the number of transistors on a microchip will double every 2 years, right? Which means it should get faster every 2 years. And every 2 years, the price should actually halve. So can you imagine, right? You double in 2 years your speed, and then you halve the cost, right? Sounds almost like our double our internet speed, half the price, right? Right. If you guys still remember a while ago, the double internet speed, half the price, right? So essentially, this is it, right? So who is Moore? If you guys remember Moore's law, basically Mr. Moore or Gordon Moore, he's actually the co-founder of Intel, right? And he's actually 91 years old today, right? And he predicted that every 2 years the speed will double, right? Or your capacity will double in your semiconductors, and the price will come down by half, right? So this is a chart that actually tracks, right? In terms of whether whether Moore's law actually applied. So this was actually since 1970 all the way to 1918. Okay, I know it might be a bit small to see, but actually, if you do a Wikipedia on Moore's law, they actually have this out, right? So you can kind of see where maybe towards here you can see the Apple A7 quad-core GPU, your dual-core, your Snapdragon, your Kirin chip from HiSilicon, and your Apple A12X Bionic, right? So these are the later ones, but essentially Moore's law is an exponential curve, pretty much, right? And if kind of on the right hand side, without boring you guys, what happens is that for transistors or for semiconductors to become more powerful, right? The idea behind Moore's law is that you can shrink the number of transistors down. You can pack more and more transistors in the same amount of space, right? So they actually measure it in what we call nanometer. Nanometer? Yeah, nanometer is 1 billionth of a meter, right? And kind of, if you're reading news about Intel and things like that, you might kind of remember seeing 10 nm or 7 nm, right? And you're thinking, what's the big deal, right? So so for me to explain this industry, I thought I need to go through this ultimate, right? Now, so when Moore actually came out with it, so this is him, Mr. Gordon Moore. He's actually worth $10 billion today. So he is a co-founder of Intel, and of course he does a lot of charity today. So Mr. Moore is still alive and well today. After 50 years, they're questioning, is Moore's still applicable? Now, when he actually came out with this theory or law, it was actually to guide his R&D team. That's it, all right? It's to guide his R&D team to say, look, guys, every 2 years, we need to fit double the amount of transistors we can in the same space every 2 years, right? And we need to project to bring it down by half the cost, right? And that's really how it started, right? It didn't start as a law to begin with. It was just a theory. And because of this is your basis, right? If you look at the basis of the growth of the semiconductor industry, they've pretty much taken this R&D note and saying that every 2 years I need to keep improving, right? Now, if you think of it, every 2 years, if I see keep improving and keep improving, what's going to happen is that you're going to see a lot of changes in this industry over every 2 years or 3 years or 4 years, for example, right? Which means new machinery, new product lines, new applications, and so on and so forth, right? So the ultimate driving force, right, on the two stocks that I want to talk about today, um, actually is really Moore's law. It's really doubling the transistors every 2 years and halving the cost, right? So for me to kind of explain the whole why I'm talking about these two stocks that I've highlighted, I kind of need to explain this portion first. All right. So uh, so let me go on to the next one. Okay, so ultimately, what's driving the growth of semiconductors, right? What is it that's driving the growth? Um, I think kind of growing up with computers, as part of life, right, very early on. I guess we all kind of experience it. If you're old enough, I'm 38 today, so I think we kind of grow up with it. Computers being part of our own lifestyle, right? Of course, about 12 years ago, then mobiles came along, right? And that really kind of pushed it. So if you think about it, Moore's law actually helped develop these two revolutions, right? If things were still very, very expensive as it was 50 years ago, we won't have a mobile phone. I won't be able to stream to you, right? So they kind of come hand in hand, right? We won't have very small, super small laptops. We won't have phones as powerful, even more powerful than the microprocessor that sent the man to the moon, right? So I guess that the next question is, what is it really driving forward? What kind of growth way forward? If more loss continues, that means transistors keep getting smaller and smaller and smaller, and things become more and more powerful, right? Would it then very quickly drive, right, the automotive industry into driverless cars, for example, right? Which is something that's been talked about for a long time. We're kind of starting to see it, but it hasn't hit mainstream just yet, right? And I guess the last one was, how about artificial intelligence, right? And I'll talk a little bit about that later, right? So if you kind of look at the numbers today, you kind of see that the smartphone revolution, has kind of tapered, right? If you're saying just smartphones alone, that's gonna taper. So you can see from 2007, you just kind of see the immense growth, right? And now we're kind of at that replacement cycle. You're probably going to grow 3 to 5% a year. That's the kind of thing. So if you really try and look at semiconductor for growth on smartphones alone or smart devices, they seem to have kind of tapered off, right? Yes, Daniel, you can have the slides at the end, right? No problem. I'll send you guys a link and then you guys can upload it. Just join the group. Make sure you join our ET Online Campus SGX group. You can download these slides there. So the question is, how about personal computers? So where are semiconductors mostly used at today, right? So again, this is from actually PwC, PricewaterhouseCoopers research. This was forecasted up to 2017. This report was done in 2017. Now, if you look at the main bulk of where semiconductors are used today, it's actually in telecommunication. This is the bright orange part. And you can see data processing, right? Servers, laptops, and so on and so forth, right? That's the bulk of it, right? Consumer electronics is still small. And automotive is small, but it is rising. Okay, so just to give you an idea, now where are they expecting semiconductor revenues to come from? Actually, it's in Asia Pacific. So a large bulk of it is actually in China. But if you're investing in this region, you must know that where are the revenues coming from? Okay, and I guess that's why semiconductor stocks have become so popular, right? Now, semiconductors have become such an important and pervasive part of our lives, right? To the point we have two countries, having a trade war dispute over it, right? Just to give you guys an idea how serious or how big of an industry this has become, right? I guess I don't have to talk a lot, but if you kind of Google trade war, you're going to see China and US coming about, right? And the whole idea started behind, literally, behind Huawei being the center of attention, and of course 5G as well, right? So, they are still fighting about it, right? So the question is, China has said they've got 5G and Huawei has it, and US is saying that, hey, you know what? No, none of my friendly country parties should be using Huawei, right? Because they're claiming them to be espionage, right? Materials, right, or espionage equipment, right? Which means that they can spy. So 5G is a pretty big deal, right? It is not just making the phones faster. Obviously, is there something that they know that we don't know, right? So the question is, if the next person who actually, or next country that controls 5G or owns it, will ultimately yield a lot of power and influence, right? So it's so much so that, in the news, I think in the last 3 to 4 months, if you guys have been catching on the news, if you're not familiar, I don't know how many of you guys have heard of this company called TSMC. TSMC, have anyone heard of this? Any heard of TSMC?
No idea.
No idea. It's all right. Actually, it's such a simple. It says for Taiwan Semiconductor Manufacturing Company. That's all it means.
Okay.
All right. They are big. They are really, really big. They control almost 50% of the world's semiconductor manufacturer. Right? They're big, right? Of course, it was so big to the point that US actually disallowed TSMC to actually manufacture any chips for Huawei. Right, and the day that actually the last day they can actually manufacture is today. Today is the last day deadline, right? So happen we have it on
Really?
yeah. So today is really literally the last day they can. Now I kind of going to talk about Huawei, and I'm going to talk about TMSC. Like, I can't talk about semiconductors without talking about these guys, right? So much so there's so much politics around this semiconductor. What's the big deal, right? That TMSC in June actually announced that they're going to build a $12 billion plant manufacturing facility in the US. All right. This, this, my opinion, it has definitely nothing to do with cost. This is very much a political push, right? If anything, right? And I mean, it's a big amount, right? And of course, Trump is saying, yeah, great, right? So I'll talk a little bit about what TMSC's business is, because they are the end client of some of these stocks that I'm going to be talking about. So that's why we are talking about TMSC, right? Now, I don't know how many of you guys heard of ARM, ARM. Anyone heard of ARM? ARM processors?
Yep, this one I heard about.
Yeah.
I read the news also recently. There's a news, right?
Yeah, you know what's interesting? When I was talking about this, then last night when I checked the news, very late, it just came out, right? ARM, as you all know, actually was initially bought out by SoftBank. Now, Nvidia has come out, the graphics chip have come out and said that they've also bought out ARM, right? So ARM had a very simple vision, right? ARM says that they want to get out 1 trillion devices online, 1 trillion by 2035. Right, just to give you guys an idea what I mean by 1 trillion, that means every one person is gonna have 130 of these chips. Right, so where are you gonna use these chips, right? 130 of them, right? So yeah, your phone can have maybe 3 or 4 or 5, maybe 10, but where's the rest gonna come from, right? And this is such a timely opportunity to talk about this, because Nvidia just bought them out, right? I think, as you all know, the news just came out last night. I was up till actually very, very late, right? So they were bought out for 40 billion. So it's giving us an idea how big it is, right? And ARM manufactures nothing, okay? They don't manufacture anything. They don't build anything. They are basically architecture designers only, pure IP. Their gross margin is like 92% or something like that. They have no costs except for human only. Okay, they don't manufacture. So just to give you an idea about ARM basically licenses out their tech. So if you have an iPad, if you have a iPhone today, you're basically using a modified version of the ARM architecture, right? if you have a Huawei phone, for example, right? And they talk about Kirin chip, or if you have maybe what's that one called? Maybe Samsung, where they use Snapdragon, right? Snapdragon, they actually still use the ARM cores as well inside their tech. So they actually kind of license the tech, right? So it's actually a very unique company. It's probably one of the only kind at this scale globally, right? But basically, almost I think they power over. I think almost 90 plus, very high percentage of the mobile devices in the world. Okay. So yeah, like you said, so I've just this just came out. Now what is interesting is this: ARM has actually been bought over by Nvidia, and if you do a little bit of research, actually they came up with one of so every country in the world is building their own supercomputer, right? So I think the one of the latest supercomputers that was built was actually built using Nvidia and ARM, right? The idea behind this, because Nvidia is right now being used a lot in artificial intelligence, right? ARM is very much the architecture that kind of provides it, right? So it's a very, 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 it's going to be it's exceptionally powerful company, and probably the only one of its kind in the world today that has that kind of reach, right? But we'll talk about that, but that's very much on the AI side, right? Now, again, some more stats for you guys. You can go and download these slides. In fact, I had to pay some money to actually dig out some of this data just to show you guys, right? So this is again the semiconductor market. It's that trajectory is kind of set, right? But the question is, we hit kind of a plateau. What is next, right? And that's why this ARM and Nvidia deal is actually quite a big deal, right? Okay, now capital expenditure. Now, just to give you an idea, so whenever Moore's law applies, capital expenditure kind of needs to happen. If you think about it, right? Every time you go and double the transistors, you cannot use the same old manufacturing machines, right? So you got to continuously make these machines to produce these semiconductors better and better, right? And it's not just the production, there's also the testing, it's also the packaging, it's also everything else that goes along with it, right? So it's not just the production. And of course, there's two companies that I talk about actually have direct exposure to Nvidia, and later I'll talk another one which has direct exposure to Intel. Intel is the other one I'm going to talk about, right? Those are the two. I mean, Nvidia is not the biggest, but Intel is huge in terms of semiconductor sales, right? Now, to kind of understand where they all sit, right? You see, I guess in this part of the world, we don't have the Nvidia, we don't have the Intel, we don't have ARM, right? These are very high IP, mostly in the US or UK based, right? ARM is UK based, right? But in this part of the world, what we are very much part of, which is very big, is actually the actual global supply chain of semiconductors, right? But to see where it all fits in, I kind of have to present a couple of different models to you guys, so that you guys can understand where the revenues actually come from some of these how do I say, the chips, right? The end users, right? So for example, what is an IDM, right? An integrated device manufacturer, right? So integrated, what does it mean? That means they do all the manufacturing, they do the design, they do the intellectual property, and they also do the marketing. Okay, one of the very famous IDM companies you can think of, right, is actually Intel, right? So you think of Intel, the chip that powers your laptop, right, or your desktop, or any of your servers, right? We're streaming on servers today, right? So you gotta buy these CPUs, right, and pretty much very largely dominated by Intel in this space. But Intel basically sells you the chip. That's why that the ad, I guess you guys can still remember Intel Inside, right? I can still remember, that ding ding ding. There's a tone to it, Intel Inside, right?
Yeah.
They do all the marketing. They build the chip, right? They design it, and they also do the full manufacturing. Okay, so that's what an IDM does. Now a foundry, on the other hand, don't care. They don't want to do design. They don't want to do intellectual property. They don't do marketing. They only manufacture your designs, nothing else. right? And this is essentially where TSMC sits, right? And TSMC is essentially the largest foundry in the world, right? They do almost 50% of the global semiconductor output is actually by TSMC, right? So which means they're not competing with their clients. That means you have a design, you have the intellectual property, you want to market it, you go to a guy like TSMC and say, hey, look, can you manufacture this for me? Right? There are pros and cons here. You think about it. So I'll go to a third one, which is what they call fabless semiconductors. Fabless. Sort of when I try to do research on this topic and trying to understand, where do all these terms come from, right? So fabless means fabrication-less, okay? The other way around. Fabrication-less, right? Which means I do the design, I do the IP, I do the marketing, but I don't do any manufacturing. You can see the difference between the two, all right? So NVIDIA is actually a fabless semiconductor company, right? AMD, have you heard of AMD? AMD chips, right?
That one I know.
Yeah, AMD and Intel, right? They compete each other, right? So these guys are all fabless. That means their business model is very simple. I do the design, I hire all these engineers, I do the design, I own on intellectual property. I also do the marketing, right? So like NVIDIA, I still remember those days, getting a graphics card just to play games, the GeForce 2, GeForce 3, right? But NVIDIA has come a long way from just having graphic card to play games. Their application now has gone quite wide out. It has gone very specific AI, just because of the architecture, right? So if you think about it, very different business models. Very, very different business model, right? So the two companies that I want to talk about today, one actually supplies to an IDM, majority supplies to IDM. The other company that I want to talk about actually majority supplies to foundries only. So you can see where it is coming from, right? But if you think about it, if you supply to foundry, essentially you also will supply to fabless. Because the fabless guys will come to the foundry to build it, right? Okay. Right. And the last one, this is the last and final one. This is where ARM comes in. ARM doesn't manufacture, they don't do any marketing. They just do design and they own the intellectual property. They only license it out. All right. So what has happened is that NVIDIA has merged with ARM. If they successfully buy us over, this is where they're at, right? They still don't want to do foundry stuff, right? Which is very, very interesting, right? And if you kind of look at the two different business models, everyone is very focused on exactly what they want to do, right? Now I'm going to talk a little bit about the pros and cons. Okay. Now, if you are an IDM person, right, Intel is today, and if you're going to do some research on Intel, you're going to realize what's happening. So in the very early days, they succeeded very well because they control all the capacity, right? So it was very difficult for someone like AMD to compete with them, right? Just because they have the production, they can succeed, right? Now, because foundries have become so big, basically, if I'm a company, I just do the design and marketing. I outsource the manufacturing, which means all the capex, all the human costs, all the equipment, all the things that I have to invest in. I'll pay a slight premium for the manufacturing, but I don't have to build any capex out from it. So you can see the pros and cons, right? Now, the pros about IDMs is that they control their own manufacturing, which means all the capacity is theirs. Okay? If you're a foundry, right? Now, Apple also is fabless. Apple products are also created at TSMC, right? So is HiSilicon, which is Huawei as well. So your Kirin chips also will come from them, right? Or one part of that process, right? And ARM basically, if you think ARM is quite smart because ARM basically covers these two guys, right? They dominate right now, and they are actually eating into Intel space as well. So stay tuned on Thursday. Andrew's going to cover that in quite detail, right? Now, so to give you guys an idea, these are generally IDMs around the world. So Intel is an IDM, Samsung is an IDM, and I put a asterisk there as well. Because Samsung has realized when you're IDM, suddenly your demand drops, you have a lot of idle capacity. So if your idle capacity is essentially you're burning money, right? So they also have a foundry business as well. So as long as it's non-competing, they also have a foundry business as well. right? TMSC is the biggest. You have Global Foundries, and you have UMC, which is United Microelectronics Corporation. But they're, if combine two of them together, they're still smaller than TMSC, right? So you can imagine how big TMSC is, right? Fabulous, Qualcomm, your Snapdragon, Broadcom. They also somewhat in Malaysia. If you think of Inari and those guys are part of the supply chain for Broadcom. Apple, AMD, HiSilicon, which is Huawei, is actually part of Fabless, right? Pure design house place is guys like ARM. Okay. Um, so so if you kind of look at the four different business models, you can see where the business is. Okay, where the business. So if we need to understand this, otherwise we cannot understand the bottom, as in where are the customers coming from. Okay. So one of the sort of inspiration I got when I did this when I wanted to prepare for this webinar, if you go to SGX, actually SGX has quite a fair bit of research and education. Actually on 10th of July, that was about 3 months ago, they actually came up with they actually come up with some pretty good articles. And they actually looked at the semiconductor plays were amongst the most traded in 2020, right? So year to date, so up to July, they were the most traded. So you can see that even when I wanted to come and look at some of these stocks, right, I want to make sure they had volume as well. If there's no volume, then there's no point as well. And they seem to have quite a big following up in Singapore. And actually, there were four or five companies that actually had the largest trading volume, right? So they got AEM. I think someone highlighted AEM. UMS, ST, AVI Tech, and Micromechanics, right? But of course, initially I was thinking, maybe I can cover all five. Then think, I think it's not so easy to cover all five in depth, or at least for you guys to understand it well enough, right, to actually make an informed decision, right? So you can see the trading value or trading turnover is quite substantial, right? AEM has about 19 million daily turnover, right? UMS has 6 million. ST, AV Tech, and Micromechanics are smaller, right? So what I did was I actually looked at all these 6 companies, right? And I pulled out all the companies in a net cash position, right? So what was interesting about this, similar to stocks, semiconductor stocks in Malaysia as well, these companies are actually in a net cash position. That means they have more cash than they have debt, short-term loan and long-term loans, right? So these are interest-bearing liabilities, right? And you kind of look at them as well. Some of them have also very, very decent net margins, okay? And I only use 2019 numbers because 2020, as you all know, everyone in part of the semiconductor industry in some way or another were affected by the COVID-19 and supply chain issues, right? So if I just use 19 as an example, they're actually trading at 15, except for Micromechanics, you don't have anything trading above 20 PE, right? And I kind of look at some of the Malaysian semiconductor stocks, 50, 60 is normal, right? And, right across the causeway, you have these semiconductor plays which are selling below 20. So the question here is, hey, you know what? Are they selling at such low PEs? Why? Is it because no one understands their business, or they don't get appreciated, or is there really something wrong with them, right? Or people, what is why is it here across the causeway we get PEs that are so much higher and across, right? So I mean, as a value investor, then I'm very curious, all right. Now, and if you look at the FQA figures, of course these are ET FQA figures. They are actually looking pretty good, which means that they have profits, they pay dividends, they have cash flow, they also have free cash flow, right? So these are not just any normal companies. These are, not companies sometimes lose money, sometimes makes money, sometimes pay dividends, sometimes don't pay dividends, right? No, they actually have strong balance sheets. That means they have more cash, they have debt, and they actually have fairly decent ratings as well. So this was what was interesting, right? Okay. So yes, okay. So the two that I want to talk about, right? Okay, I'll show you guys the two later. Okay. So what we're gonna do is Benny is gonna help me out here. Benny's actually gonna help me out on the technical side of things, looking at the price charts, and I'll sort of go through each of these companies to give you guys an idea what and which part of the supply chain they sit in. Okay. Now, the first one is actually called UMS Holdings. Okay. UMS Holdings took these numbers as of last week, 11th of September. I know today's 15, but I don't think it's changed too much either way. This company's market cap is about 500 million, right? So it's about 1.6 billion ringgit, right? I translated the ringgit so that I know sometimes my mind works in ringgit. That's the problem, right? So, but if your mind is flexible, then I've shown you SGD and also ringgit. So you can actually see that these guys do some decent revenues, right? 400 million ringgit worth of revenues, profit about 100 million ringgit, right? And operating cash flow 162. So they are actually quite decent numbers, right? What was interesting about UMS Holdings is that unlike most semiconductor stocks, that the fast-growing ones that don't tend to pay dividends, they actually paid pretty decent dividends, right? And they're also in a net cash position. So from a Singapore standpoint, if you're a Sing dollar standpoint, they actually have a dividend yield of about 4.1%, right? So considering that you get nothing in the bank, right, or close to nothing in the bank, right, 4% is a pretty good yield, right? Now, this is what the price chart looks like. So when I end, then Benny will come and join in and kind of help us look at the chart a little bit. But over a 5-year, 10-year return, this company has done really amazingly well, right? A 20% CAGR or 25% 10-year CAGR, right? So I guess the question is, it's gone up so much, right? Is it still worth looking at? Okay. Don't forget the price has gone up because its fundamentals have also improved tremendously as well, right? And if you look at them, they are PE of 15. Okay, they are PE of 15. Okay. Now let's have a look at where the business. Now, when I started doing research at some of these stocks, I realized that they actually are somewhat similar. When I say somewhat similar, is that a bulk of their revenue normally comes from one company, right? A bulk of it. So or a bulk of their revenue comes from one segment of their business, right? So if you look at this UMS Holdings here, now when you do UMS Holdings, you actually do a search. There's also a UMS Holdings Berhad. They're two very different companies, okay? Please don't think of that. This is UMS Holdings Limited, right? SGX. Now you can see that their revenue 90+% all comes from one segment, right? And sort of I started thinking, right, just to give you guys an idea, right? Where does a group bulk of their income actually come from? I know it's weird, but it says Singapore, and then US, and then Taiwan, and Malaysia is very small, and others very small, right? So bulk of their 70-80% of their revenue comes from Singapore, and trying to figure out why. Okay, where is it coming from? Now, so if you kind of do some research, and I found done some digging, of course, a lot of these semiconductor companies, they're a bit trickier to do research. Why? Because they're actually not allowed to disclose their end client, okay, because of NDAs and so on and so forth. So you have to do a bit of digging, right? You have actually not do a bit, you have to do a lot of digging to kind of find out, right? So after reading quite a fair bit of articles, I realized that what is it that this company does, right? You see this product here. To me, it looks like a pancake maker, like something where you put your pancake in there. It looks like a pancake maker, but actually it's not. It's actually a wafer depositor. So the why it's round is actually you put your semiconductor wafer there, and you kind of put it in, and this machine actually puts in layers and layers of very micro layers for your semiconductors to work. So this is part of the semiconductor chain. And you know what? Who uses this, right? Foundries. Anytime you need to manufacture a semiconductor, you need to use something like this. Okay. And in this space, you kind of have a look, right? they don't manufacture the whole thing, mind you, right? They manufacture what we call the water module in part of this they call it PVD. I'm trying something depositor, physical vapor depositor. Okay, you can see here physical vapor deposition, right? Without getting too technical, what it does is physical vapor deposition means that they turn gas into a film onto the physical vapor PC. It's also CVD. Okay, so either one. They basically turn a solid or a gas into a film onto the semiconductor to put it on. Okay, it sounds very simple, but it's actually not so simple. It actually needs a clean room environment as well, right? And basically, this has very large users now. Who is actually one of the biggest sellers of this machine here? It's actually a company called Applied Materials. Okay, I don't know. Anyone heard of Applied Materials? You can put in the comment section before. If you heard of Applied Materials, put in a comment below. Okay, they essentially build equipment for semiconductor manufacturers. They build it for them. I mean, these are the equipment. So if you want to set up a factory, you need to buy equipment, right? So that's what they build. And this model that they've been selling for over 20 years. One of these is also not cheap. It's quite high value. So you kind of imagine the more volume of semiconductors that they need to churn out, the more machines they will actually need, right? Yep. Okay, so Peter Law, yes. Colin Au, Ahmed, Sean Ha, yes. Okay, so you guys are probably very familiar with the semiconductor space, right? Yeah. Yes. Okay, great. So you guys know, I guess, kind of understand where Applied Materials is, right? Now, so actually, what does UMS do? This is actually from their slides. This is essentially where they do this, right? So this is what they do, components manufacturing or EMS, right? Now, how are they positioned in the value chain? Now, this is actually directly from the slide, so that's the beauty of it, right? If you can see, they actually supply those components to this company called Applied Materials, right? And mind you, this is not an easy feat. This is very high precision stuff, and their net margin is 25%. So you can imagine. I mean, if it was so easy to do, someone will find it cheaper, and you have much lower margins, right? On top of that, they're also based out in Penang and a few other countries as well, but their cost is not cheap as well, right? So they supply the Applied Materials, and Applied Materials is a very large company. They actually supply to chip makers like TMSC, Samsung, Intel as well. So you can kind of understand why I talk about foundries and also integrated device manufacturers, IDM, like Intel. So whether if you're a chip maker, as long as you're any of those that I mentioned earlier, as long as you have a foundry or manufacturing, you need to buy equipment like this, okay? And it's very specialized equipment. In fact, if you kind of Google it as well, you have jobs that are specific. If you're a technician, your skill set is specific for an Applied Materials machine, and so on and so forth, right? Okay, so it's that specific, and it's technical in nature. Ultimately, of course, TMSC and Samsung also make consumer electronics, like your Samsung phone, your Android phone, your Apple phone, your iPad, and everything else, right? So inadvertently, you can kind of see where they sit in the value chain, right? So not in front, not up here as well, but actually behind this very big company called Applied Materials, right? They are listed on the Nasdaq. So UMS is actually in Malaysia, Singapore, California, but I think that's just sales, marketing, and Texas as well, right? But it's really kind of sales support offices. But the bulk of them is actually in Malaysia and Singapore, right? Actually, the biggest one is, I believe, it's up in Penang, 500,000 square feet they have, right? And that's where all the production happens. Okay. So the whole idea behind this business model is very simple. Whenever there is capex in this space, right, they will be one of the beneficiaries, right? That means anytime the foundries need to invest in equipment, they will be one of the beneficiaries. Now, so if you kind of look at this, you can see that actually, let me see if I can see that color. Okay, you can kind of see that in 2020, almost all companies like TMSC has actually increased their capex guidance. That means they're spending more capital expenditure, buying more machines, right? And for the machine manufacturers, right? Obviously, like Applied Materials and ultimately UMS Holdings, they will be one of the beneficiaries, right? And if you kind of look at them, 2020 or 2021 is actually going to be higher or at par with some of these companies, right? But of course, these are estimates only. One of them, TMSC, has raised its capex to 17 billion this year, right? In COVID-19, just when you think everything has slowed down, but it seems like most of the except for memory, memory is a different segment. Semiconductor guys are actually ramping up their production, right? So just to give you an idea who AMET is, because if you want to understand who UMS is, you must kind of understand who Applied Materials is, right? They are listed on Nasdaq. They're a huge company. Their market cap is 50 billion US dollars, right? Very, very big. It's about 200 billion ringgit. So that's equivalent to maybe three Maybanks. Okay, just to give you guys an idea, 200 billion is about 3 Maybanks, right? Or close to it anyway. The revenue is about 60 billion ringgit or 14 billion USD. Profits about 11 billion a year, right? And they have in excess of 10,000 employees, right? So they got 23,000 employees in 18 countries. So they are very, very big, right? So you can kind of see that if you want guidance on UMS numbers, you should actually look at their largest customer, which is Applied Materials, right? And they actually have a very long-standing relationship with Applied Materials. In fact, their contract was due for renewal in December 2019. It's just been extended for another 3 more years, right? So when you develop some of these components, it's not so easy to just switch suppliers. So they actually have very entrenched relationships with their clients, okay? And if you can kind of see, this is kind of the guidance for Applied Materials. Almost everything on a growth basis is up, except for or even OLED TVs also they do is also up. So if you can kind of see, a big bulk of their client, actually a big bulk is actually in semiconductor systems, and this is the part of the supply chain that they're in. Okay, this is for Applied Materials, all right. Now, I also did some digging, and I watched quite a bit of videos, and being in an American company, right, Advanced Materials, they're actually based in the US, but they also have an office based in Singapore. It's actually a research outfit, right? And I did some Googling, and thanks to Google Maps, I realized that both their offices are really near each other. According to Google Maps, they're about 8 minutes apart. If you want to walk from each other's office, it's 8 minutes apart. This is my way of doing analysis. I'm just thinking, they must be very, very close to their customers, or their customers need to be very close to them, because it's a constant R&D process that they're always doing, right? And all this really boils down to Moore's law, right? Doubling the transistors every 2 years, right? So they have to keep coming up with new and upgraded equipment, right? This is actually their research center, right? So this is the research facility in Singapore. So according to Google Maps, you can go and Google it, right? Thanks to Google Maps, I know they're 8 minutes walk, only 650 meters away, right? Okay. So let me see. Okay. Now in terms of so this is their address, just to give you an idea. Now, give you guys some numbers, what they look like. Now, in terms of revenue, it's been quite flat for their business, right? But very, very consistent. They kind of remind me of Uchitech in Malaysia, right? Their margins are about 26, almost 30% a year. Every year they make profit. If you can look at this, every single year they make profit. Revenue's been a bit flat. Okay. They also pay about 70+% of their earnings as dividends. Okay. On top of that, you can see their cash flow is always positive, except for 1 year when they expanded. Every single year, there's also free cash flow. Whatever cash they have is actually more than their short-term loans and their long-term liabilities, right? So, in essence, they are what I call a net cash company, right? Who runs this company? This company is owned by the founder. He's still run by the founder. He owns it. He founded it. He owns about 20% of the business. Okay, so he owns about 21% of the business directly under him, and the rest are actually held by funds, right? So this is the company that you might want to look at. So what are the pros and cons, right? I'll talk about the cons. Concentration risks on revenue because they're very tied into one customer. But that's also another pro that I give them because they have a very long-term working relationship with Advanced Materials. So they actually proven themselves, and they're very entrenched in the ecosystem. So it's kind of difficult to kind of untangle them. So kind of I'm trying to balance the pros and the cons. Of course, the bulk of their revenue is transactional in nature, which means that you have to kind of bulk of it is transactional, meaning that you buy a machine, then I'll produce it and I'll sell it to you, right? It's not recurring in nature, so much recurring in nature, but they do have a recurring business, which is actually the consumable market. So all the machines they sell, the consumables, is worth about 20 million Sing dollars a month, right? And from what I understand from Advanced Materials, Applied Materials, these are based on subscription basis with their clients as well. I think they have a fairly attractive dividend yield at 4.1%. And they are, financially, they've got a fantastic balance sheet and they've got good track record as well, right? So this is one part of this one of it. I don't know, Benny, you want to kind of check out the technicals, what they look like?
Yeah, we can. Quite interesting because as you are talking about Applied Materials and TSMC, I try to plot their charts out and see how UMS is performing against them as well. So let me just share my screen. Yeah.
Okay, cool. I'll hide mine. So if you guys have any feedback, please put in a comment below, and Benny will help us out.
Okay, so first chart I'm going to share is basically UMS. So this is how UMS look like, right? In this is a short-term period. We are looking at the two years period over here. So like you have mentioned earlier, right, Alvin, our Malaysian semicon industry, or most of the counters have actually gone to historical highs, but not UMS, right? So if you look at the performance since the March low, you can see that actually we are seeing an uptrend for UMS based on the long-term 200-day moving average since 2019. But if you look at the Malaysian semicon, actually most of the long-term average is actually going down since 2018, right? But so here you can see that yes, UMS has quite big volatility as well. You can see just before the COVID, right, the price was 1 ringgit and 10, and then it fell down to about 55 cents low. That's a 50% decline, and in a matter of months, it returned back to the current price. So right now, we actually have quite a good proposition over here because the price has actually pulled back to its long-term 200-day moving average. Because the high was around 1 ringgit. 1 ringgit. We're so used to 1 ringgit. 119 Sing dollar, right? That was just slightly a month ago at 119. And it's now trading at 96.5 cents. So it has really fallen about 20% from its high. So question is right now whether the price is able to continue its bullish trend, because we are seeing that 200-day moving average continues to increase since 2019, which is a year ago, right? And right now, as long as the price stays above the red line, which is a 200-day moving average, then the trend should be able to continue. But what I want to share with you as well is this chart over here, because here I have three different charts, right? And you mentioned earlier, UMS Holdings, right, which is the red line over here, that gives about 874% returns over 10-year period. And Alvin, your slide, the 800 odd percent return does not include the dividends, is it?
No, it doesn't include dividends. Yeah.
So that's just purely price, lah.
Just purely price, yeah.
Okay. So the red line here is UMS, UMS lah, correct? UMS. Right. The candlestick chart here, that's actually TSMC, Taiwan Semiconductor, right?
Yeah.
And you can see the most volatile among the three, and the blue line is basically Applied Materials, the blue line, which follows very closely with the with Taiwan Semiconductor lah.
Okay.
Right? But
So the
you have
blue line is applied materials.
yeah,
Okay.
correct. Taiwan is that candlestick chart here. That means the price Taiwan Semiconductor is here right now. So the return over the 10-year period, same with UMS. Actually, Taiwan returned about 640%, right? While applied materials only 400%. And so that means the performance of UMS or UMS, right, is double of AM, applied material over the 10-year period. Okay,
That's
so
because I think applied materials only 60% of their business is semiconductor systems, whereas for UMS is very close to 80-90% of their business is tied to semiconductor systems.
I see.
Yeah.
Okay. Yeah, so that's why we see that disconnect over here, again from Taiwan Semiconductor and AMAT. And of course, if you look at the performance in the shorter term, if I just bring it closer, the short-term performance seems to be in line with most of it. So if you look at, for example, a 10-year, a 5-year period, right? You can see it was almost similar, but it's only that the initial stage was quite high. That's why you see the percentage run quite big in beginning of 2009, 2010. All right. So with that being said, so you look at the 5-year period, of course, Taiwan Semiconductor is actually the leading one. But if you look at the chart for the past 2 months, it has really gone sideways a little bit. And the thing is that when prices start to go sideways, and you mentioned earlier that was it because of they have to stop?
With Huawei, right?
Huawei, right?
Yeah, Huawei. Yeah.
So for the past 2 months, the price has just been staying sideways, while UMS and AMAT is actually coming down for a correction, right? So if we look at this, I if you ask me, I think the price is just about right for UMS. It's already at a long-term 200-day moving average. And of course, anything if it goes below 200-day average, it will be a value, if you ask me. Because if you look historically, right, the time that it goes below the 200-day moving average is actually a very short period of time before it goes uptrend again. So anything below the 200-day moving average, which is about 92 cents currently, and now the price is only 96.5. So this is technically it's quite a good price to look at, lah.
Well, so good timing, luckily.
Again, this is for educational purposes, and what I just mentioned is just based on the charts, lah. Okay.
Okay, so I'm gonna go through the second one. Thanks for that, Benny. So Benny will cover the second one as well. Now, the second one is actually AEM Holdings. I think some of you guys have heard of AEM, or if you've not heard of AEM, that's all right. And I'm here to kind of give you guys an idea. So where is their exposure? Now, if you think about UMS exposure is through applied materials. Applied materials is actually across the board. Anyone manufacturing will buy a machine from them. Example. Okay, AEM is a bit more I think I didn't update these numbers, so ignore these numbers. Let me update this. This is their market cap is about 3 billion ringgit, right? So they're also not a small company. They're about Sing dollars about $1 billion, revenue about 300 plus million, profit about 50 million. So their net margin is about 15 to 18%. Also very, very decent. But the dividend payout is not as great as UMS that we talked about. Now, so my last price I had was 363, right? Now, this has been a crazy return for any investor, okay? Your 5-year return is about 9,000%. It was like 6 cents 5 years ago, 4 cents 6 years. Now it's $3 something. So you can imagine the growth in this, right? It's crazy, right? AEM is actually quite interesting because it actually has an interesting history as well, right? So it was listed on the main board of SGX since 2000, and now it's 20 years later, right? They had to go through a complete change of ownership, and then they went through, what SGX called a watch list. We are used to what we call PN17, right? So it's actually emerged from PN17. I think in the last 10 years, it's had about in the last 10 years about 5 CEOs. Change of 5, and plus if you add another one as an acting CEO, so it'll be 6, right? Since that, sorry, not 10 years, it was since 2007, right? So in the last 12 years, they've gone through about 5 to 6 CEOs. The CEO today is actually fairly fresh. He just started 1st of July 2020. So really
Wow.
barely 3 months. Yeah. Okay, so we're on the 6th CEO for 12 years, right? So this company is professionally run. It's actually owned by funds, right? So there's no founder running it. Okay, so it's a full-on professional management. um Now, so if you so this is a history, you can actually get it from their AGM slides. They were actually listed 2000 here. If you can see, they run into some governance issues, so you can go and Google it. So CEO resigned. There was like a bit of like a I think the one investigation by CBIP in Singapore, right? So go and Google it. But that's history, right? But what do they actually do today, right? They're actually into test handlers, right? So I think some of you who are very familiar with semiconductors, you know what test handlers are, right? Basically, like kind of robotic arms or testers that move a process from one side to another, right? Now, where are they based? They're based in quite a few countries, but I think the Finland and France is actually fairly new, because that's something that they recently acquired through an M&A, right? So, but generally, actually, Singapore, Malaysia, obviously Penang, and also in China as well, right? So predominantly here, this is brand new. Let me just put this is probably a year old and a year a bit, right? This is brand new, acquired. So France and Finland. And I think these are just rep offices in California and Vietnam as well. Now, so what is it that they do, right? They are what we call equipment system solutions, right? So essentially, they build the testing lines for foundries or manufacturing companies. I know it's kind of hazy, but again, when I said the similarity to UMS and this is that 95% of their business comes from just this one segment. So it's a very focused. Okay. Now, I mean, nothing wrong with that. I mean, it's just highly specialized. And because they're good at what they're doing, and that's the whole point, right? In business, they call it the hedgehog model, right? So you got to keep running and at it until your flywheel is cranking. Of course, they have other things like system level test and inspection. They've got the MEMS market as well. They even talked about 5G, but then the 5G is actually all of them are very buzzwordy at this point. They all represent less than 5% of their revenue at this point, right? But with a lot of potential for growth. So a big part of their business right now is still developing test handlers, right? And it's consumable. So if you kind of look at for all the engineers in this room today, I was actually watching this, right? You can see that there's a non-digital probe. They have test handlers, right? Semiconductor handlers, pen kits and sockets, and your interconnected testers, right? Now, a main bulk of the business actually is let me see if I got that slide. Okay, the main bulk of the business is actually test handlers, pen kits, and sockets, right? So essentially building the line for foundries and manufacturing companies, right? Anyone want to guess who's their main client? They also have a one big client. Again, they're not allowed to disclose, but somehow it was around and it was floating around the internet, and I kind of found it. Anyone want to take a wild guess who their single largest customer is, right? I've read some reports that very notable reports that note that even I think up to 90% of their revenue come from one single customer, right?
Wow.
90, yeah, 90. Anyone want to guess which semiconductor company? I think I
On
mentioned
the foundry,
Sorry?
IDM, which sector?
IDM.
No, IDM.
IDM.
Okay, there's only three, right? I remember.
Three big ones, yeah.
Three big ones.
Yeah.
Okay, see who can guess, right?
See, you can guess. So I'll narrow it down for you, right? IDM. Of course, they have other customers. Don't get me wrong. No, not Samsung. Not Samsung. They're big.
Intel.
Who? Intel. Yeah.
Intel.
Spot. Yeah. Yes, Intel, right? Intel is their biggest client, right? Now, what is interesting about their business is this, right? So think about Intel, right? Intel also have their own manufacturing facilities, right? They are a fully an IDM, right? So if you want to follow this company, you must follow Intel carefully. Okay, that is the clue, right? That is the clue. Because what happens there is going to happen here as well, right? And if you look at their business, it's quite interesting. Actually, their tools and machines is actually only about, it's actually almost a 50-50%. No? That means the tools and machines that they sell is actually 50%. The rest is actually consumable and services, right? So that means it's not just selling hardware, it's actually selling hardware, consulting, and also the consumables, right? Which I believe this part here is actually the recurring part. What I haven't been able to 100% confirm whether a bulk of their revenue is actually recurring, right? But from it looks from the look of things, it almost seems that it's maybe 50-50. Okay, about 50-50. Not good, not bad. It's just the nature of the business, right? So you can see their profit before tax is actually quite healthy. It's about 25%, right? Margins, profit before tax, right? So after tax, you're probably just shade below 18%. Okay. Yes. Okay. So if you want to follow this company, you must follow Intel. Now, so if you look at Intel, so who is one of the co-founders of Intel? Obviously, is Moore, right? Mr. Gordon Moore. And that, remember that what I said was double the number of transistors or double the speed and half the cost, right? That was the R&D goal, right? It's become not only the R&D goal, it's become sort of the R&D goal for the whole industry, right? Which means TMSC and everyone else also adopts the same, right? Double and half. And what has happened, if you kind of read up a little bit about what has happened to Intel, so one of the biggest things that they said that was going to happen in 2016 or 15, that they want to come up with the 10 nanometer chip. They are about 4 to 5 years behind time. That means they were not able to do what Moore was saying, that they were not going according to Moore's law, right? However, their competitors who did a different business model, for example, AMD, who doesn't own any manufacturing, said that I'm going to outsource everything to TMSC. So TMSC says I just focus on whether I can double and half every 2 years, right? So what has happened is that AMD is now kind of beaten them, right? Probably for the first time in history, simply because of the business model, because they focus purely on design and marketing, and TMSC purely focus on manufacturing, whereas India has to focus on everything, right? And they were actually 5 years late, right? In fact, what has happened is that today, from what I understand, TMSC is already at the 7 nanometer chip level already, right? And Intel is still trying to come up with the 10, right? Now, so you can see TMSC has already moved to 7 nanometer from 2 years ago, right? The next big step, they're looking at 5. After 5 is either 3 or 2, right? That's the idea. So when you think of 10, 5, 7, 2, right? So really, where is the growth of the semiconductor industry? It's very much driven by Moore's law, right? And if you look at it, now having Intel as their client is not a bad thing, okay? It's definitely a good thing. If you look at this, Intel, by sales and revenue for the semiconductor industry, you can imagine how big of a chunk they actually occupy. It's huge, right? So even, I know some of you are saying they have been big, a bit slow, a bit lazy, right? But even then, my laptop today is powered by the Intel. If you're still running a Mac today, it's also powered by Intel. If you have any servers up in the cloud, it's also powered by Intel, right? What is not powered by Intel is basically your mobile devices, which is powered by ARM, right? So if you kind of have a guess, right, having Intel as the massive incumbent that they are, they've actually kind of slowed down, and they've not been able to deliver what they actually were supposed to deliver, right? And really, here comes the kicker, right? The kicker is this, right? So now they're under extreme pressure, not just from internal, it will definitely be external, right? They're gonna need to do a lot of catch up, right? When I say 4 years is a long time in the tech world to be delayed, right? I think they say this December only you're gonna get your I think was it Tiger Lake? I can't remember the name of the chip. It's an Intel chip, something Lake, right? Which is a 10 nanometer one, right? Which Apple is now moving away from Intel as well. So those are the external pressure coming. So Apple has come out and said that in 2 years' time, their Macintosh or your MacBook and all will no longer run Intel. It's going to run ARM instead, right? So now there's a lot of pressure for them to catch up and actually innovate, right? Not necessarily a bad thing for a company, if you ask me. External pressure is always good. Otherwise, you become lazy and incumbent, right? And you stop innovating. And if you kind of have a look at the market share that they still hold, they are still the largest in the market, right? By company, by sheer size, they are still the largest. So they're not someone that you can ignore, right? So what has happened is this. So AEM as a business actually supplies to Intel, right? One of their supply chain manufacturers. And if you look at them, actually in the last 3 years, they have been ramping up. That means their sales keeps going up. Now the beauty about SGX is that this company also gives guidance. So last year they did about 200. Last year they did about 300 million in sales. Last year, 2019. This year in COVID year, they are guiding 480 to 500 million sales. That's what orders that they have today, right? That's their guidance for this year 2020. So what is kind of gives me an indication that Intel is pushing very hard to do a catch up, and now they are spending capex, right? I guess also as a CEO, you have the free hand to now spend capex, right? Because how are you going to catch up otherwise, right? So some of this capex is actually flowing downwards. Of course, AEM is one of the benefactors of this. So if you can see that their sales for which is the latest guidance for 31st December, can you imagine this is in 2020, right? When supply chains are disrupted, they are guiding 60% growth in their top line, okay, for 2020. So if you can kind of have a look, why this has been such a great turnaround story is been they moved from 47 to 70 million, 200 million, 262. Last year they did 323. This year they're saying they're projecting 500 million in sales, right? That is quite significant. So if you increase this, you'll probably look at 80, 90 million in profit, right? So the PE that I'm looking at today, so if I kind of go back, I just give you guys an idea. This is a historical PE, right? Let me just sort of go back. So AEM at today is 18 times is actually historical PE. So if you kind of factor in that growth, you're looking probably at 12, P of 12 or 10, right? For the business, and they're also in a net cash position, right? They're also in a net cash position. So if you can kind of see, the cash flow is strong. They have 100 million in cash. They actually have very little in well, they are in the net cash. They have more cash than they have in liabilities. And if I kind of move forward a bit, yeah. So really, the whole idea behind this, that I just want to give you guys an idea that you now have two contenders, right? One that kind of supplies everyone, and then one that's very specific to Intel itself, right? And if you follow Intel story, you kind of see where they all kind of fit into this place. So it's AEM and also UMS, right? So maybe Benny, I'll switch it back to you, and you wanna just have a look at maybe do an Intel and AEM. I'm curious to see.
Yeah. Okay. Let me just share my screen. Yeah, interesting enough, I think AEM stock price is actually more volatile. Just share with you. Again, if you just compare even with UMS, the figures are actually quite strong, quite volatile. Not just strong, but it's volatile. So hold on, let me just go into my screen.
Yep.
Okay, so yeah, so over the 10-year period for AEM, the AEM one is this. Let me just change this color first. Okay, so you see on the candlestick chart, that's Intel share price. If you look at this, I'm just going to change the color. Hold on. Okay, I'm just going to change this to blue so it's easier to see. Okay, so that blue line is AEM. Okay, so if you look over the 10-year period, right, Intel has returned about just share price has returned about 193%, but AEM has returned 980%. So a big difference. So it's like it's like trading warrants. Like when Intel goes up certain percentage, AEM goes like 3 or 4 times more. So if you look at this, so whenever you see a rally in Intel, So instead of buying Intel, why not look at AEM, right? Because they move in tandem. So yes, it does move, but it's more aggressive in terms of its movement as compared to Intel, right? And of course, when it comes down hard as well. So you have to be careful here. If you're monitoring Intel share prices, you know that AEM will provide that extra volatility, right? So if you look at that chart alone, AEM, right? If you compare with earlier UMS, for example, so if you look on UMS, if you look from the March lower to the high was in August lah. So UMS from the low to high from March till the high in August was about 116% movement, right? Whereas AEM from the low in March to the August high returned about 229%. That's twice UMS returns in this short period of time. So if you look at its share price, and of course what goes up can come down quite hard also lah, right? And if you notice UMS earlier, UMS was actually quite near the 200-day moving average down here, right? But AEM is still here. So if we look at Intel prices, which are still coming down right now, okay, if I look at Intel in the short term, okay, this is very important because if Intel comes down, then normally AEM will come down more because I show you the chart historically that it is actually more volatile, right? Okay, let me just remove AEM here. Okay, so if you look at Intel is currently in a downtrend, right? Is below the 200-day moving average, which is a red line, and you can see here, although there's a rebound here in August, but the price continued to fall. So that's the reason why we see AEM is starting to pull back as well. And I guess that for this particular stock, because the price is way above its average, we call it overbought. This will not be a good price technically to look at this counter. If it falls around 283, 284, then it provides a good price against its value because that's where it's near the 200-day moving average. So that's the AEM. So if you are into AEM, expect volatility.
Good for trading.
Good for trading, yeah. So if you monitor Intel, instead of buying Intel, just buy AEM better one.
Yeah. Look, we're kind of at the end of the this segment, but where there are a couple of resources that if you guys like. If you're watching this on your mobile phone, it's gonna be hard to kind of scan this, but you can actually download the SGX mobile app. You actually get access to all their research reports and their investor resources. There's also a Telegram group that I'm part of where they actually push out some very interesting analysis as well. So if you want to find out a little bit more about SGX, you can do that here. Now, I just want to, because there were some questions on some brokers that how do you open an account, right? So there are a couple of online account brokers in Singapore, which is Tiger Brokers. This is not related to Tiger Beer, okay? This is Tiger Brokers, and Poems, right, which is Philips Securities, right? By the way, we're not paid to say any of this brokers, okay? We're not again sponsored by any brokers or anything. I'm just highlighting to you.
So these are purely online brokers, right?
Pure online. So if you want to speak to these brokers, you can, yeah. Only online. If you want Malaysian brokers that can actually also trade in Singapore, these are the guys. Of course, you can also download these slides later on and also connect to, right? If you already have a Malaysian broker, you can just call them up and ask them whether you can buy Singapore stocks, right? And lastly, if you guys are just new, just joined us, we are on every alternate Tuesday, right? Tuesday is value investing night, and we're gonna talk about. You can go to facebook.com groups, ET Online Campus SGX. It's absolutely free to join, and that's where you're gonna get updates and goodies or anything related to the Singapore market, right? That's where we're gonna be discussing it. Yep, I think that's it.
Yeah, you mentioned earlier that Andrew is gonna talk about tech as well. Is it relating to semiconductor?
No, just tech trends. That's on Thursday.
Okay. So you guys, if you want to continue to today's, you want to go deeper into tech, if you really want to ask tech questions, then Thursday will be the best time to ask tech questions to our chief future officer. So he looks at our future, right?
I think
So
he'll
Andrew
be
Wong, please
discussing
go
the
on.
Apple and ARM thing this Thursday, I think.
Okay. Yeah. So go down the rabbit hole this Thursday.
All right, so don't forget Moore's law. If you want to invest in semiconductor stocks, Moore's law is your ultimate driving force. Okay, it's your guiding point.
Yeah, if you look at the chart, I mean, all semiconductors in the long term is all bullish trend. It's just that markets do react to bearish trend. So, yep, Moore's law still works, lah.
Yeah, looks like it. All right, I think we're at the end. Almost 1.5 hours. Thank you very much for tuning in. I hope you guys learned something, enjoyed something, and also got a bit more information on hopefully the SGX market, right?
Yeah, and you do love this session, please share this session with your friends on Facebook. And you haven't liked us on our Facebook page, please do like our Facebook page and follow us. And also on our YouTube, please do subscribe, right? Because if we get more guys coming into our session, we will do even more research for you guys, right? I hope that you guys are able to motivate us as well. So please share this with your friends. And tomorrow, so tomorrow is Malaysia Day, right? It's a holiday. So,
Yes.
guys, thank you so much for joining us tonight. Although tomorrow is a holiday, you may want to go party tonight. I think it's still early. You still can go. And now shops can close at 2 a.m., right?
Yeah,
So,
2 a.m., 2 a.m., yeah.
yeah. So thank you so much for joining us tonight. Happy Malaysia Day to all Malaysians. And tomorrow we will not have any live sessions. So you're going to go deeper into the tech sector and related to ARM, please do join us on Thursday. All right.
Yeah, these slides will be available on our WhatsApp chat, 8408-2070. Uncle Jim will give you these slides. Just give us about half an hour to upload it, right? Then you should be able to get these slides.
All right, awesome. So the number is tagged now on the comment section, so you can just click on WhatsApp us with that number. So it's a WhatsAppable number, right?
Yeah.
Or although it's not a handphone number. Okay, so thank you so much once again. Thanks, Alvin,
All right.
for that.
Thanks, Benny.
Research that you have done. I know it's a lot of work.
Now I can sleep tonight.
Awesome, man. Yeah, thank you so much. So good night, everybody, and we'll see you again.
Okay, good night, guys. Bye bye. Let me see. I think we're